What's going on, everybody? This is Market Monkey Trades here. I hope you had a good trading week. I just want to go over the $280 supply and demand trade I took on Friday, show you guys my entry, my exit, my plan, and my overall thoughts on the trade. So stay tuned. It's going to be a very insightful video. And before I get into it, I just want to go over a few things. I have a very good day trading Market Monkey workshop. It's on the Market Monkey website, marketmonkeytrades.com, and there you can find all my strategies and all my courses there. I also have an Instagram, Market Monkey LLC on Instagram, and I go over my trades every single day with supply and demand. And honestly, there's not really any other accounts being so transparent with y'all. So I would really check Market Monkey on Instagram because I post on my stories like every day, the setups live happening, and you can take the trade with me. So it's pretty insightful, pretty good. All right, let's get into the trade I took on Friday with my favorite strategy, supply and demand. So I always like to look at my day trading rules I have for myself, and I basically just break it down into 3 different parts. What I always do is I just like to have news or something in the background just to hear if there's any news you might have not caught, or not to necessarily even pay attention to the trades they might be talking about, because I only trade supply and demand. I only care about that. But just to have some other traders in your ear while you're trading, just to hear their take on the market is really important. So I like to have CNBC or news on, and that's just a small part. But first, which I really cannot stress enough, is you have to watch NQ and ES holdings. So what I trade is the S&P 500. So you have to be watching NASDAQ because NASDAQ moves the S&P 500 and /ES is the S&P 500. So when I'm trading the S&P 500, I need to look at what is driving that price. I need to look at what is making the S&P 500 react in a certain way. So you have to look at its top holdings. So its top holdings is Microsoft and Apple. Now, if you can look at this chart, you can notice right here, these charts are basically identical. Why? Because Apple, the way Apple moves the S&P 500. The way Microsoft moves the S&P 500. Basically a mirror reflection. So make sure you're always watching NASDAQ and SPY's biggest holdings, or you're basically trading the S&P 500 blindly. Now next, I like to look at the 5, 15, 30, and hour time frame for my supply and demand strategy. Why? Every time frame is going to tell you a different story, right? So you need to look at every single one and see where the best time frame for you is to enter your trade. Now, for the second part, all the price action between the supply and demand zones is just noise. Say you're just a retail trader and you blindly get in the market right here for no reason. Maybe you saw a VWAP play and you wanted to get in the market here for a long. This consolidation, this play, all this price action is just noise to me. There's no clear reason to get into a trade randomly here. That's why I trade supply and demand, because it gives you a where. It gives you a where and kind of a why to enter a trade. Everything else between supply and demand zones is just noise, and that's very important because there's no reason to blindly get in a trade here or here thinking you're going to hit a VWAP play. You can scout maybe, but it just, there's no, that's trading like a retail trader, okay? So supply and demand zones give you a where and why to enter. Now, this is kind of just part of my supply and demand zone strategy, but I like to trade the direction of the market. And obviously, I only enter as supply and demand zones. Like I stated earlier, all the price action in between is just noise. So what I've noticed with my trading is every time I trade against the market is basically catching a falling knife. And if you trade with the market, so let me get into a daytime frame real quick. So this past 2 weeks, the market has been crashing. And if you were to trade to the upside on either of these days, you would have got wiped out. And all my trades for the past week have been puts, and they've all made me green. And I've noticed that you just trading the direction of the market is much more successful for me than taking a call off demand. See, I could have taken a call off demand here and made some money, but I told myself, no, I don't want to trade against the direction of the overall market, which was in a bear trend. So I waited for supply, and once it hit supply, and I've seen that it's been hitting the supply zone over the course of the week. It started here, hit it here, rallied again, hit it here, back down, rallied into supply, completely exploded to the upside, and I knew that if it could hold inside this supply zone, we were going to see a big flush to the downside. Okay, and most people will tell you want a fresh zone, but this zone to me was with the market context I was seeing actually made more sense to me because we've been in this bear market. So it made sense that it would actually have big resistance at this level and then continue to go to the downside. Okay, now this is super important. Only enter a supply and demand zone because of volume and price action. Supply and demand zones don't always work out. So if you see this demand zone here, you could have tried to get long here thinking, oh, I want to get some calls for this demand zone and have it rally into supply and take some good profits. But obviously it flushed and it didn't work out. So not every zone works. You can't just blindly get into a supply and demand zone. You have to only enter if there's volume and price action. That is so important because price action is king, okay? So the trade I took on Friday, I made $300 from it. When I took it short right here, and it was consolidating the zone for about an hour and a half. And I didn't take the trade because it was in supply zone. I took the trade because I saw volume increasing coming in here. Look at this volume here, okay? And just absolutely explode after volume came in and price action told you what the market was going to do, okay? The zones don't tell you what the market's going to do. Price action and volume do, and that's very important. My stop loss, I like to put it at the high of the supply zone. If I was getting long at demand, I would put it at the low of the demand zone. Now, it's very important to have your stop loss because obviously your trades won't always work out, like I said earlier. I risked 10 pips to make around 60. So like 1 to 6 there. So you really need to protect your ass. You really need to protect your bank account. Put your stop loss in. Just put out the highest supply and the lower demand. Now, another good tip is consolidation / imbalances is just noise, like I said. So this consolidation in supply, I knew with weak volume isn't gonna make any moves. If it has consolidation or has an imbalance in price action, the market's not gonna move. Okay. Now, guys, only enter with a clear plan. Sometimes the plan doesn't work out. Always protect yourself. So, like I said, always have a clear plan when you go in. Don't just be getting in because you see these demand zones. Get in because price action and volume and market context. All right, everybody. Thank you for watching. I hope this was an insightful video for you guys. I'm going to be posting my live supply and demand daily recaps every trading week. So make sure you subscribe. And I appreciate you guys watching. I'll see you guys in the next video.